Welcome to Thursday Night Live. I'm Greg B, and I'm a CMT charter holder. So basically, I'm a professional when it comes to analyzing and forecasting the market. It was a big day in the markets today, a big down day. We're going to cover the markets. We're going to cover some trade ideas, and then I'm going to break down your guys' stocks. Okay, so it's been pretty intense, and it is a Thursday, which means there's a bearish engulfing candle. Basically, there's been a running joke that every time it's Thursday, there's a bearish engulfing candle on the daily chart. So I'm going to move Discord over there. And basically what this means is we could see some downward pressure from here. The last time there was a big bearish engulfing candle right here. Take a look at that. You know, there's a few inside days first, but eventually the market did resolve itself lower. So when you see a bearish engulfing candle, it's really important to mark the highs and the lows of that candle. Those are important areas to note, okay? So if we close underneath today's low on the QQQ, that's 473.89, we can break down the SPY as well. The reason I have QQQ up is that's where all the action has been, you know, all in the NASDAQ. But if we take a look at the SPY, this is a shenanigans wick. Don't mind that. That one didn't actually print. If you go to the hourly time frame, yeah, didn't really print. But when we see bearish engulfing, look for potential downside. Now, if we get above the bearish engulfing candle, you can probably see all-time highs pretty quickly. Okay, so that's just my quick take on the overall market. What I can do also is do a quick Fibonacci retracements and measure from the panic low on Monday from the yen carryover trade and measure to this high, not the all-time high, but the recent high. And you can see that a healthy pullback would be SPY 532.90, around that area. Is it going to be perfect? No. But that's, you know, another 2.37% downside. I'm in that camp that we could see that. It could morph into something more, but for now, my forecast is just sideways to slightly lower. If we do start to climb back this bearish engulfing candle, and we start to hang out near the highs, the probabilities favor that we could be starting to build maybe a bull flag on the daily like this. This is our rally, and then we could consolidate maybe for a bit and then break out. That's the less likely scenario as of now, but I just want to put it on your radar. Okay, so that's the overall SPY. We can take a look at the QQQ. A bit more prominent on the selling. You know, Romulus was short heavily on XLK, and he was getting some good ads at 224, 225, and then boom, a nice good drop on XLK. This is cool, and I am still holding a little bit of some of my put options, but nothing crazy. You know, I have an October wide put debit spread. Okay. And I have a bear call credit spread expiring next week. Basically, that'll hit the max profit as long as XLK is underneath $230 a share by next Friday. And that's the most likely scenario that it will stay underneath that level, because when a chart drops this much, it does a lot of damage, as in it takes a lot to claw back. Just like this rally did a lot of damage to the bears, today's sell-off did a little bit of damage to the buyers. Okay, and it's just important to be aware of where are the buyers and where are the sellers? How are they feeling? Do they feel the pressure? Do they not care about the pressure? Are we contracting or are we expanding? Okay. Next up, let's break down the SMH ETF. This is the semiconductor ETF. And again, I gave a rating on SMH as just neutral to bullish ever since we broke out over 224. That's just what happened. I expect us to probably stay within this range, maybe for another week or two. We'll see how Jackson Hole develops the market tomorrow. That's going to be interesting, because normally on Friday, the markets just chop. Most of the time, I'd say 2/3 of the time, markets will just chop on a Friday. But 1/3 of the time, the market can get a nice, good trending green day to the upside. That happens quite often. And sometimes it can get a trending day to the downside. Another way to think about the market too is what options are expiring? What's the open interest on the option chain? Because that tells you, hey, where do people have their money committed? And are the market makers going to press the max pain? So if we take a look at something like SMH, the expected move is plus or minus $5.48. You know, we can take a look at the open interest. I don't see anything too crazy. A lot of open interest contracts at the 240, 250. You know, a lot of open interest contracts. It's kind of spread around at the 255 level. They could be short those calls. They could be long those calls. Basically, that means, though, that like 255, we're probably not going to get above that tomorrow. That'd be crazy. But we're probably not going to sell off too crazily either. We'll see. So that's the SMH, a leading indicator. Down today. Again, forecast is sideways to slightly lower. Just to briefly check on some individual stocks. NVIDIA hitting some sell side pressure. I gave a target this week of 130 on Sunday. NVIDIA hit 130.60 and is now selling off. I did go long on Intel at 21, and I was sitting pretty on the position. Now I'm down on Intel, and you know what? That's okay. I can handle it. There's my position if you want to see my shares of Intel. But basically, we'll see. I think Intel probably gets hit short term based off this formation, and it probably does something like this and maybe tests like 1739. The risk to reward that I'm looking at with Intel is I think Intel can double from here and get up to 40. I'm not going to target 40, but I do think something like 30 is reasonable. And I'm probably just going to end up taking profits at like 24 within like a year, which doesn't sound like too crazy, but this is like a risky/safe speculation, in my opinion. I think Intel has about 20 to 30% upside. Could it go bankrupt? Sure. It does have 30% downside, but guess what? The wheel and option selling really helps out with the cash flow each and every week on Intel. So Intel's really kind of like the only really like losing trade this week. Other than that, though, it's been pretty chill. You know, futures trading is really interesting. I traded live with you guys this morning, and it was a really choppy morning, and I was going short, but I was getting like wicked out just before it dropped. I was like, but I eventually did get back in short and made a good chunk of that money back. Then as soon as I went to the gym, I was like right about here. Then the market does the peaceful sell-off wave on a increase in volume. So moving forward, let's just play it day by day. I don't think there's going to be any crashes, but it could morph into that. That's how crashes start, is nobody thinks there's going to be a crash and then it morphs into it. Okay, so that is the SMH and QQQ. We can check out IWM. IWM, again, just kind of flopping and chopping around. IWM on the daily really caught a lot of people in this false breakout right here. Okay, so here's the high, low, lower high, higher low, bull break into a reversal. They definitely use this liquidity to short IWM. They could have been, the big boys could have been shorting in this consolidation too. But now we're kickback rallying back into resistance. You know, this whole gap is a resistance area. We touched that this morning. This is what a rejection looks like. Perfect textbook example of rejection. So if anybody says, what's a rejection? You can just show them a chart of the 15-minute IWM chart or even the 1-minute IWM chart. Like, look at that. Pennant. This is the exact same. This is the fractal nature of the market on the daily time frame. Okay, look, I'm going to go on the daily. Look at this. Pennant, breakout, snap in. 1-minute time frame. Pennant, breakout, snap in. And then look, the exact same fractal kickback rally into a drop, into a consolidation, and then another drop. So is the IWM 1 minute foreshadowing the IWM daily? You tell me. I forecast sideways to slightly lower. If we do get above today's high on IWM, I expect it to probably chop in this upper range. So nothing too much there. A lot of gunk in the market. You want to pick your spots carefully. pick your individual stocks carefully. Okay. Next up, we got the DIA, the Dow Jones. And again, not doing too bad, only down 1/3%. So a bit of relative strength. You know, I think stocks like Nike and Disney. Nike was a long setup last week, you know, around like the 83 area. And, you know, it got a tiny little bounce. Nike was also a long over 73. Didn't really do too much, though. You kind of had to pick your entries pretty carefully to get a profit on this. This one was the best one. Notice the volume change, the change in relative volume. You break out on volume, boom, you get continuation. Similarly, Disney. Disney, I talked about leap call options the day after earnings. And those leap call options, you know, Disney's rallied 6.4%. Nothing crazy. Disney's kind of dead right now. But the reason I bring up Nike and Disney is that, you know, they're decent components in the Dow. You know, Apple, big component in the Dow. Apple barely down today. That's nothing considering Apple up 15.6%. That was a nice breakout and retest from a lot of stocks like Apple and Nvidia. Here's our all-time high breakout. Quick little retest. Cool. All right, so nothing too much there on the DIA. We can check out the VIX. VIX, we did say, hey, on Sunday, look for a potential bounce on the VIX somewhere in this 1470 area. The low was 1468, 1446, around there. And VIX is up 21% since then. You know, it's just natural that there's going to be a bounce at some point in the VIX. I was wrong, though. I thought it could have been sooner. You know, the market could have done this bearish engulfing candle really right here. It could have done it at any of these points in time. It just decided, yeah, today's a good day. If we got enough buyers on the train, all right, rug them. That's the way to think about it. Okay, so that's QQQ, IWM, DIA, VIX. One thing about the VIX is you can monitor the VVIX. This is the acceleration of the VIX. If this is starting to go up, look for the VIX to potentially get clapped. Or sorry, for the VIX to go up as well at a faster rate of change. Okay, so VVIX, think of it as like the rate of change of VIX. If VIX is speed, VVIX is acceleration. Okay. All right, next up we got is gold. Gold breaking out, retesting. I'm glad I sold half of my call options right at the dead all-time high. So a lot of Legion members really enjoyed that trade alert. You know, buying in the consolidation, buy calls, take profits on that nice gap up. I am still holding half the calls, so we'll see if those can get a juicier profit. I expect gold to probably just go sideways for a bit. But, of course, if we start to take out those highs, there is the chance that it could go parabolic. So I'm neutral / bullish on gold for now, especially as long as the old all-time highs hold the support. You know, as long as this little retest area is fine, I'd allow it to even come inside the consolidation a little bit, but I wouldn't want gold, you know, really coming underneath the low ends of the consolidation. That's just, it's not even really like bearish. It's just like, you have to wait for your position to come back. That's all. So that is GLD. Oil. Let's check out /CL. These are crude oil futures. You can also break down USO. If you want to trade oil, take a look at UCO to buy oil long. Or if you want to go short, SCO. SCO goes up when oil goes down. Just simple ways to trade it. You can also trade the futures. You know, I trade a lot of futures with Apex. You can trade /CL, /MCL. If you want to trade futures on just like Thinkorswim or your regular broker, the margin requirements vary, but if you got like $2,000 in your account and you have a margin account that's approved for futures, you can trade like one MCL contract. And it moves decently well, you know, depending on your risk tolerance and your net worth. But looking at oil, kind of just chopping and flopping around. I was bullish on oil at the beginning of 2024, and that was correct. I did take one decent sized loss buying oil averaging up a little bit too high, but then I just got out. That's totally cool. Actually, it was called away on like one of these rallies. But now oil looking bearish to me. Right now it's neutral, but it has the potential to be bearish. So if CL really starts breaking underneath today's low, it could start to waterfall lower. It is a bit extended to the downside, so I could just wait for something better. But I think if oil /CL breaks $71 a barrel and especially $70 a barrel on an increase in volume, you can take a look at maybe buying UCO shares. You know, UCO can fly decently well. A UCO breakout, an SCO breakout would, be like 1873, and you could see a retest of 22. That's a 17% gain. And if you want to, you could wheel it. It's not the most liquid, but it's not bad. You could buy 100 shares and sell the 21 strike covered call for September 20th. So that's a potential trade idea. Let's check out natural gas /NG. Natural gas coming down. I'd like to see this sell a little bit more, and then I'd look at a cash secured put on UNG. UNG actually kind of already came into that area, so maybe I'll let it. If UNG's down tomorrow, I would look at selling the 1350 strike cash secured put. Try to limit like 0.15 for that. That might be tough to get, but if you could, cool. So that's UNG natural gas. Just that's the only way I'd like to trade natural gas is just the wheel. But yeah. All right, so that's NG. I also want to talk a little bit about uranium. Uranium, if this could get more oversold, I might be interested in a little dip buy on URA. 24 is kind of my level. Yeah, and just a great break, retest on this structure, and there's room to accumulate as long as 2270 holds. So that's uranium. Let's break down TAN. This is our solar sector. Kind of looking bearish as a chart. Breakdown, retest, shooting star candle, underneath resistance. Volume kind of looks bleh. I do think TAN can probably outperform if Kamala Harris becomes president. I don't know the exact odds of that happening, nor do I know the odds of Trump winning. There can be various polls from various places, but just something to think about. Have a game plan for whoever becomes president. Just think about that. All right, hey, so now we're going to go to stockcharts.com. Right here. What we're going to do is charts and tools. And then we're going to go over to sector summary. And I'm just going to change the period. Come on. We don't need to change the period. Let's just go down the list. XLY. So this is our consumer discretionary. On the weekly chart, just looks neutral. Although I will say, be careful of the falling volume on rallies. This could just be like a summer volume, a summer dead cat bounce. That's a big bearish engulfing you can take a look at. Amazon. I'm bullish on Amazon longer term. I do think it's a good stock. I do think the stock can be worth $250, $260, $300 or $400 a share in like 5 years. I do think Amazon's probably a dip buy at like 170 if you're willing to build into it down at like 130. It would be a pretty decent market drop for Amazon to even get down to 130. So that's just something to think about. So bearish engulfing in the short term, though, we talked about that. Tesla, big bearish engulfing candle. Tesla looks like it wants to retest 203.50. Okay, as of right now, sure, it could recover. It could, short-term resistance would be 219. And of course, if we get above 225 on Tesla, it would probably break out and maybe test something like 243. My favorite way to profit from Tesla is TSLL and just wheeling that. That's just a simple way to do it. Because I just love those weekly premiums. And your equity is more or less stable. Versus when you trade options or buy calls or buy puts, you open up your portfolio to an extreme amount of volatility. And it's great when you're right. It's not so great if the trade doesn't play out. All right, so that is Tesla. That's XLY. So consumer discretionary can get hit the hardest if there's a recession, because think of discretionary income, extra income above necessities. That's going to get hit the worst in a recession. In a booming economy, in a booming bull market, XLY can heavily outperform. And it has done decently well for the year. You know, it hasn't done really bad or anything. That's just chilling. All right, so that's XLY. Let's check out XLB. This is the materials sector. A lot of, think of like metals, gold miners, you name it. I want to see some of the holdings on XLB. Yeah, LIN, SHW, FCX, Freeport, Air Products, Newmont Mining, there we go. Dow Incorporated, Nucor Corp. You know, some decent stocks here. Nothing too crazy though. It looks just range bound. And I'd probably expect that to probably stay for quite a bit of time. You know, there's been some okay setups here. This isn't really like an ETF that you like want to trade, but you just kind of monitor it, and maybe you can pick some stocks within the ETF that you like. There is a nice breakout setup over 93.46. And guess what? There's a nice breakdown setup underneath 86.78. Cool. So that's XLB, the materials sector. XLU, utilities. I've been bullish on utilities for a while. Ever since this 67 breakout. And then I said, if you can get 67 again, that'd be cool. I'm actually going to, give me a sec, you guys. I'm going to stand up. My back is killing me. All right, and I'll get to your questions towards the end. Good questions. Yes, and I will say just right now, the stochastic and the RSI, they both help with overbought and oversold. The stochastic's a little bit more sensitive. Great question, Jesus. And yeah, we'll talk about those SPX 0DT iron condors. Those have been doing well. And you've been picking your ranges really well, which is cool. All right, so XLU utilities. Again, breakout, retest. Usually, though, when utilities are doing this well, it is kind of like a yellow flag for the market. It's not a red flag, but it's a yellow flag. And so just be mindful if utilities is kind of looking like a like a growth stock. Some big stocks in utilities, NEESO, that's Southern Copper. Duke Energy, I am long on Duke Energy. I am long on Dominion Energy. So those are some of my top picks from this ETF. I'm also long on Entergy. That's ETR. ETR was talked about on the Victory Talk podcast back when it was at 106. I said this is a good long, and I'm going to look to take profits at 119. I should probably sell. I've just been liking the dividends. I should probably sell, though. All right, so that's XLU. Nothing too crazy. I wouldn't short it. I wouldn't buy it. You just kind of got to wait for a new setup. Consumer staples. Consumer staples is kind of broadening out the rally. Consumer staples has been a dud, especially back in 2023. But a really strong recovery from consumer staples. We talked about this kind of like consolidation breakout. It wasn't clean. Now, I just give a neutral rating on consumer staples. It's not bearish. It's not bullish. It did just make all-time highs, though, and that's no joke. Like, all-time highs, I think, should be taken seriously until it turns into a false breakout. That's pretty much it. Take all-time highs seriously until it turns into a false breakout. Just a quick note, stocks like Netflix made all-time highs this week. I think that's because they launched those like new games. Did any of you guys play games on Netflix? I feel like I'd rather just like play a PS5 game. But, you know, I did play that Bandersnatch. Did any of you guys do that one? Bandersnatch? I thought that was kind of fun. I didn't go through all of the scenarios, but I went through a few. Either way, though, Netflix, it really stretched to make those new all-time highs. It was on a mission to the moon. Now I don't know so much. Got a little bit of a bearish candle today. Still, though, relative strength compared to the rest of the markets on Netflix. I'm sorry to get a little bit off topic, but that was just XLP making all-time highs. XLK, this is the big winner of the day for us. This is a big, big short too. And I know it feels uneasy shorting green candles like this. And then you just see the market go up day after day and it just never drops. That's fine. The market didn't have to drop today. It was just more likely to drop today. But it was also more likely to drop even yesterday or the day before. Today they wanted to do one quick higher high into a dump. And that's kind of like a big component of what a rising wedge is. This wasn't like a textbook rising wedge, but whenever you make higher highs without a lot of follow through, that's where you start to turn into a rising wedge. So here's an example of top one, top two, breakout, BO, not body odor, but breakout. We break out. What do? We consolidate, we go sideways, we break out. Okay, now we're starting to make higher highs into a dump. Higher high into a dump. Higher high into a bigger dump. That's kind of the sign of a rising wedge. Higher highs without a lot of follow through. Just like a bullish wedge is lower lows without a lot of follow through. And eventually you pinch and then you break upwards. It's not to be confused with a channel. A channel usually can get mucky. So that's something to consider. XLK though, big win. Romulus taking profits at the low of the day. Like 220.12. That's pretty much the low of the day. And that was a really, really nice win. More to come, and that's just a typical active style trade. A bit more of a martingale style of betting system, but it tends to work out, especially if you start small and you have a high bankroll. Okay, so XLK, similar with the QQQ. It's XLK is NVIDIA, Microsoft, Apple, AVGO, AMD, CRM, Adobe, Oracle. So that is XLK. Okay. Next up we got is XLI. This is the industrial sector. This will probably outperform if Trump wins the presidency. Not a guarantee, but something to consider. 129.07. That is a breakout, and it's barely down today. Basically flat, while the rest of the market gets hammered. So that is some relative strength. If you take a look at the holdings of XLI, you got GE Aerospace. I really like GE long. I like GE long, you guys. We traded this breakout right here. We went long at like 161. Took profits into the 169, 170s area. Now we're kind of at that same level. GE long over 172.29. Maybe just shares or leap call options. That's if the market environment doesn't get too nutty. If you had to pick any time to take off from trading, you guys, if you had to pick any time to take off from trading, come back at the end of the election and then just pick all the wins. Pick all of the wins. Okay? So that is GE and that is XLI. I also want to take a look at some other holdings. Caterpillar and RTX. Caterpillar, kind of just chopping and flopping all around. RTX. This is a long setup over 106. Kind of broke out, but then chopped back in. Now sitting at 119. That probably goes sideways to slightly higher, unless the higher low trend breaks. One thing that I was talking about the other week was ARK short. And this is a good short, but then it's squeezed. So I am still short ARK, just a little bit. I'm going to see if I can't exit maybe at like 42.90. If there is a bigger sell-off, though, for Jackson Hole, that can turn into a nice win. But I might have to take an expense trade on ARK. It's one of those things where I can see it breaking out in real time, but the market at each point in time was very likely to pull back. And it just didn't. Something fishy's going on. Kind of like how you release job numbers and then everybody trades and makes very large bets and investments based off a certain jobs number. And then you come out and say, oh yeah, we're going to revise the jobs number by 800,000 jobs. And so a big difference. That just means the market is not what it seems and anything can happen. Don't have any conviction either way on any stock. Okay? Where was I? All right. XLC, communications. This is where Google and Meta live. XLC, communications, new all-time highs today. And then a dump. That is to be taken seriously, though. New all-time highs. That just means, hey, let it pull back. Let it find some support. Maybe it's worth a dip buy. And then you can add through the breakout into all-time highs. Again, Meta and Google are going to be the biggest holdings of this. Taking a look at Meta. Meta, new daily highs. I posted this as a long over 540. It got as high as 544. Nothing too crazy, but a nice breakout. You know, this is a textbook little chop, flag, breakout on an increase in volume, new all-time highs. Then it started to consolidate for a bit, and then it just died with the market. So that's Meta. Google. Google at the beginning of the week, I said it probably stays underneath this 168 level, but it probably stays above this 157.80 level. That still holds true, and Google is still in this choppy bear flag. I should have taken the Iron Condor trade, but there's just other trades to be had, and I was focused on futures trading. But Google, if this bear flag, breaks down, Google's got 150 with its name on it. And by the way, Google's my largest holding in my long-term portfolio. I'm just not selling. I'm just holding. And it's doing good. It's fine. It had been doing better before it dropped 14% from the highs, but that's not too bad. That's nothing. Google's been a good performer in the long run. And, as long as 150 holds, that's just a dip buy, in my opinion. For now. Depending on your time horizon, too. Short term, medium term, long term. That's just my opinion, though. Things can change quickly. And I'm happy to update my opinion. All right. Next up we got is real estate, XLRE. Real estate's looking very, very strong. Very, very, very strong. Running up, running away. Breakout into new highs. Looks good to me. A retest of like 40.68 could just be a short-term buying opportunity, depending on how it unfolds. One thing I've been talking about is VNO, Vornado Real Estate, Vornado Realty Trust REIT. This one's been good for the wheel. I got called away up here at like 30, but still, if it could retest something like 30, that could be a potential entry or a cash secured put opportunity. So that's VNO. XLE Energy. We're almost done, and then we'll get into your guys' questions. So XLE, breakdown, retesting the old gunky area. Yeah, nothing too crazy about that. XLE would only really be bullish if it could get above 94 and move higher. I did take a bullish leap call spread at 90. Was up a little bit, then down. Now it's just slightly down. I think I might just cut that one. I'm not bullish nor bearish energy, although if oil does break down, energy's probably going to break down as well. And oil high, low, lower high, higher low, lower high, higher low, lower high, starting to test and make a lower low. Can that be the bear break that peeps are looking for? Time will tell. Okay, so that's oil and energy. And just think of oil, a quick rule of thumb for oil. If oil's dropping, that's more recessionary. If oil is pumping, that's more inflationary. Obviously, there's more to it than that. But if oil's dropping, think recessionary. If oil's breaking out, inflationary. Of course, there can be alternative fuel sources and energy sources that come about over time. Next up, we got is XLV, the healthcare sector. XLV's been doing really, really well. I've got this Leap call in the Roth that's just chilling. That's up quite a bit of money. And again, it's just holding the Jan 2026, 190 strike call. I thought it was a good deal, getting it for $68 or 68 cents. And now I've got a ways to go though, but I got a couple of years. If the healthcare goes up more than 23%, I get the right to own 100 shares of XLV, and it only cost me $68. So XLV can benefit from an AI world. It's also a defensive sector, so it can outperform if the markets drop, but it can still drop. I think a retest of the old highs are a buy. I think the monthly time frame, we've been coiling for a very long period of time, and XLV is playing catch up. The volume could be a little bit better, but I got nothing really else to say besides 148's a dip buy, 140's a dip buy, and if you want the tiny, tiny dip buys, the 152 level. Okay, so that's XLV. Some top holdings of XLV: Eli Lilly, LLY, UNH, J&J. So LLY. This is posted as a relative strength long setup. This is posted, I believe, over 900. 900. So it's up 6.5% since that post. Did anybody take that one? UNH, United Healthcare. Looking just neutral. This is an ugly, bullish chart. Left shoulder had right shoulder neckline breakdown, or is this just a bull flag into a pop? It's the most bearish, bullish chart that's ugly on UNH. Going back to XLV, J&J and Abivi. J&J doing pretty well. Nice solid dividend of $1.24. ABBV. Abivi, dang, strong new all-time highs. This one, I took a long setup over here, cut it, but then I got back in right over here, 166. So now that's doing well. Abivi. Nice, nice, nice. I'm thankful. And lastly, XLF. I'm bullish on XLF. I'm bullish banks. This looks bullish. This looks constructive. Brandon Carter was talking about the XLF long down here at 41.50. Now it's sitting here at 44. That's a good move for the boring XLF. These are our bank stocks. So I really like that. JPM was a long setup this morning. Cool, cool, cool. There's JPM looking good, looking strong. This looks like a quick scalp through those breakouts, through that daily high over 217.50. Pullback, hammer candle, bullish candle, breakout. No huge red flags besides just the fact that the market has gone up straight up for like 10 days in a row. After just brutality. 7.6% in like 2 or 3 days. It's interesting. Volatility expands in interesting ways. And that kind of leads me into one of my trade ideas, KRE. I want to see maybe if the KRE breaks out tomorrow. That'd be over like 55.23. KRE. Okay? So hey, why don't you guys post your questions over there and I'll take a look at them. Okay. Yeah, big win on XLK. Definitely, definitely. Jonathan asks, I was thinking of doing a 0 DT SPXW bear or bull credit spread on these bearish engulfing days. Using a big 5 or 15 minute candle as stop loss. Yeah. Just tag me before you take it. That's all I'd say, because there could be some other factors at play. In terms of like entries, I didn't really have any setups for credit spreads for me today. Just because I need like a big random parabolic spike. That's when I do the bear call credit spreads. Or if there's just a big flush right out the gate and I know there's a lot of support nearby, that's where I'll do the bullish put credit spreads. Or if I can pretty accurately define the range and think that it's offering enough premium, then I can do a bullish or bearish weighted iron condor. But iron condors have been good for a while. You know, this day was a good day for iron condors. This was a good day for iron condors. This one I would have blown out your butthole on the upside on the iron condors. Kind of similarly with this day and this day. So it's not always the best, but if you can pick your ranges well and you have a deep understanding of the support and resistance, you're good to go. All right. Okay. Yeah, I would say the best use for like a stochastic RSI, stochastic RSI, is just using it for bullish put credit spreads, bullish put credit spreads or cash secured puts. It's not always perfect though. So right here, stochastic RSI gets oversold. Boom, you can do a cash secured put. Cash secured put. This one right here though, you would have gotten destroyed because the stochastics were oversold. Obviously this one paid. This one paid. This one paid. You know, what are some other stocks that I like to wheel? SoFi. This one paid. This one paid. This one would have gotten you some drawdown potentially, depending on your expiration. It did bounce after though. So stochastics RSI, just a bit easier to, its speed and velocity is a bit crazier versus if I just put up like an RSI, the relative strength index, that's measuring speed and momentum. And this can help find bullish or bearish divergences. So even right here, RSI makes a higher low, SoFi makes a lower low. I'm buying SoFi. Buying SoFi. Maybe I'll even buy this breakout too. Overbought and oversold, sure, that's fine for selling options premium. What I also like for selling options premium is implied volatility. Implied volatility. This is the forecast of future volatility. So it's going to help you look and find the prices of options, whether they're cheap or not. So look, implied volatility on SoFi right now is relatively low, meaning if you're super bullish or super bearish and you're looking for a directional move, it might be okay to buy a put or buy a call because implied volatility is saying, hey, it's a good deal. It's a good deal to buy that put or buy that call. Okay. One quick trade idea is ON on holdings. So if this breaks above today's high above 44, maybe even above 44.50, that could be a breakout trigger. You have higher lows to defend your position as well, which is cool. So, and full disclosure, I am long like 10 shares. So basically flat right now. We'll see if I add to that in time, but ON, long setup. See if that can't break out. Now look, implied volatility is pretty low right now because look, earnings got out of the way. Implied volatility rose up in front of earnings. Earnings gets released. IV comes down. So maybe could look at something like, hey, October 18th, maybe like buy the 45 call or maybe even buy the 50 call. Buy like 2 or 3 or 4 of those and then just sell those onto pops. So that's another trade idea. Again, though, the market What's tricky is finding a short setup, as like a strong, good short setup. Because they don't make it easy for shorts. I feel like longs are just simpler and easier. You just buy and then other people buy after you and then you dump the shares on them. Not always, but yeah, okay. SB is asking about ALB. So this is the largest lithium producer, right? ALB. If we take a look at something like the daily time frame, strong downtrend for a period of time, a nice breakdown underneath 112. I don't know. I wouldn't go bullish on ALB. I think there's just better stocks. Now this could be the dead low, and maybe I'll look like a fool for saying I don't want to go long ALB. You know, your risk to reward is great. The trend is down. So pick your poison. Trend is down, but the risk to reward is great. I'd say it does have room up to that 112 level. Maybe you could use a stop of 71. So you're risking 17% to potentially make 27% or more. The risk to reward makes sense. The trend just doesn't for me. This looks like a kickback rally within a downtrend. Now, if it puts in like a higher low pivot and then starts to go, now your risk is even tighter, risking off of that 71.97. TSLL is double levered. Yep. Given that it decays, can you give some guidelines as to how we should stay in the trade of being wheeled? Yeah, just know that the premiums are high, but if Tesla goes up and down a lot, like if Tesla does some of this, that's going to decay away TSLL much more, because you can take a look at TSLL on like a weekly time frame. This was at 28 when Tesla's at all-time highs. If you look at the monthly time frame, at 28, makes a low of 464, and it will decay over time. You just have to either roll your covered calls or treat it more as like a short-term trade, because you don't invest in TSLL. You invest in Tesla. And by the way, this isn't financial advice. I'm just saying theoretically. I'm not telling you guys what to buy or sell. I'm just some guy in some weird flowered shirt. Okay. What's the best way to identify leveraged ETFs that decay over time? The more the leverage, the more the decay. Just think of it like this. Something costs $10. The stock price is $10. It drops 10% and then goes up 10%. Are you back at $10? No. It drops from 10 down to 9, and then it goes up 10%. Now we're at 9.90. That 10 cents is the slippage. That gets magnified the more leverage there is. So, for example, QID is a double levered inverse of the NASDAQ. That's going to have less decay than something like SQQQ. Look at SQQQ. Sad. A sad chart for SQQQ. But, again, trend is down. Risk to reward is long. That looks like a bullish engulfing candle. You buy this, put your stop underneath the low of the bullish engulfing, and then see if you can't get a pop. SQQQ looks like it has 8% upside, maybe 9% upside. So QQQ might have 3% downside. And what would that be from here? A simple, reasonable 458. I'd say the Qs could drop down to 450. Now, especially since that was a 14% rally in, 2 weeks? Crazy. All right, hey, any other questions, you guys? This has been Thursday Night Live. What an interesting day. That's for sure. A lot of red, but some green. You know, we can take a look at Japan. Japan, full recovery from, look at this. Japan in 1, 2, 3, 4 days, Japan drop 14.64%. Then rallies 17%. Like even if it doesn't crash, just a small pullback is super likely, unless of course you do that bull flag and then you pop. Okay? All right, well, hey, much respect to all of you guys here. I'm going to be on the Victory Talk podcast tonight. And without further ado, I bid you adieu. I won't be live trading tomorrow, but I'm there going to be answering all your questions. We have the Jackson Hole meeting, and I'm going to have a ton of trade setups on Sunday night. Sunday night is where I get all of the fresh, juicy setups. I'll be assigned on some of my cash secured puts. I'll be called away on some of my covered calls. And I have a ton of cash usually over the weekend ready to deploy for our goals. All right? Yes. All right. Much love. Peace.